Hey everybody, good morning, good afternoon. It is Trendy John from Simpler Trading. I hope everybody's having a fantastic weekend. What a beautiful weekend it is right here in Florida. If you guys are ever in town, please reach out to me. I hope that, if I'm not on vacation or flying somewhere, that we can connect and have a really good time together. And just, I want to say thank you to anybody and everybody that's out there who supports me and Melissa and what we do here at Simpler because I believe that we are having an amazing year and it's just going to get better. Now, before we get started, just take a few seconds, please, and just hit the like button and share this video with friends, family, struggling traders who you see out there who are having a hard time. Now, saying that, one thing that I made sure that I did this past weekend was keep it real. So just stay right here with me just for a few seconds, okay? If you do not follow me, out on X, please do so. If you come over here, you guys will see this is me, Trendy John, TR3NDYJON. Okay, and be careful, there are a ton of imposters out there. Matter of fact, if you just go over here and we do something like, let's do Trendy John, you'll start seeing that different names will pop up, like this one, for example. This says Trendy John with two N's. You come over here, they say they got the same information. Look, this person has blocked me, right? So this is not even me. And they are pretending to be me. And they could try to reach out to you and ask for something. I will never, ever reach out to you and try to ask you anything, okay? So this is me. This is the number of following, that I'm following right now. This is the number of followers that I have. And you can check and see if it's me just by asking if you are unsure. Now, saying that, what I wanted to get to really fast is right here. Okay. And that is if we look here, you'll notice that I post a couple things in here, and it might be things that you guys don't see out there, and that's why I encourage you to follow me out here. But over the weekend or on Friday, I said this year has been a wild ride, and while it looks like many of you are thriving after this week, I'm genuinely happy for you, and I really am. I want to keep it real though. Trading is tough, and it hasn't been smooth selling for me. Now, when I say that, I don't mean I'm doing horrible. I'm actually doing really well. I do have some unrealized losses because Tesla needs to get where it's going, but this is a long-term trade for me. It's equity and I'm having fun trading around it. Okay. And just like maybe a few other trades like Home Depot off the top of my head, where I have some leaps, but I haven't started my closer at the money leaps yet. So I did a couple out of the monies, but overall, trading's actually doing really well. But what I don't want you to get into after a really bullish week is into this mindset that trading is easy. Because to me personally, last week was pretty easy if you're just buying the dip and so forth. But overall, just remember it's a marathon, not a sprint. Okay. So I want to keep it real with you guys. I don't want you to forget that the last several weeks were difficult and it was really bearish. And you're probably thinking right now, hey, I feel a little euphoric, right? Maybe, just maybe, things are about to turn, right? And this is where you start feeling bullish. Maybe you've been sitting on your hands. Maybe you haven't been doing a whole lot. And now is the time when you're getting super bullish. Well, I'm going to go into a couple levels and speak to you and give you a little bit of my experience and how, our emotions are typically completely opposite of buy low and sell high, right? People tend to get really bullish here towards the levels we're at right now. And over the last several weeks, a lot of traders have been having a hard time. They're negative. They think we're going to touch the lows. A lot of feelings of, I guess, being fearful creep in. And I think it's a great time to talk about that. Okay. But let's start with our normal stuff and we'll kind of end with that. Okay. Also, as a reminder, you can, when you're watching this YouTube video, you can go to the speed settings and turn this up to, I would say, like 1.5, maybe 1.25. That'll make these videos go a lot faster. You'll still pick up on the information that I'm giving you, but you don't have to listen to it at a slow pace and spend 30 to 40 minutes watching this. Okay. Let's get started with this week's major U.S. economic data. Okay. That is scheduled for this week. Okay. So on Monday, which is tomorrow, we have nothing. Now, coming off of a bullish week, typically what I would say is that if we start to take out Friday's highs, that we will probably just sort of melt up towards some levels, and we'll go over those levels here soon. And then on Tuesday, April the 29th, you notice that things start to get a little bit busier. And these are in Eastern time. Okay. Remember, all of this is just a catalyst that pushes us to the levels that we've already predetermined in this broad market analysis. And that's what I love about the strategies that we're using is that we reel you in and make you understand that anything that's scheduled on here, even news that the POTUS is dropping, is just a catalyst to push prices to these levels. And when price gets there, we react, right? We use the process that we're teaching to get into these trades, either long or short. So Eastern time, 8:30, we have advanced U.S. trade balance and goods, and then advanced retail inventories, advanced wholesale inventories, and then 9 o'clock we have S&P Case-Shiller, consumer confidence, and then right here job openings. On Wednesday, we have ADP employment, GDP, employment cost index, consumer spending, PCE index year over year. And then we move into pending home sales. Thursday, Friday Eve, let's talk about it. Initial jobless claims. All of these, again, can cause volatility. And the big, surrounding information that I believe that everybody's getting excited about is this week's earnings reports, and we'll get to that here in a second. So besides this stuff, we got a lot out there. Initial jobless claims, PMI, ISM manufacturing, construction spending, auto sales, Friday, U.S. non-farm payrolls, U.S. unemployment rate, U.S. hourly wages, and then factory orders coming in on May the 2nd. Since we're sitting here, just a quick reminder, I am headed to Miami on this day. And so I'll be flying out in the morning. Most likely, I need to look at my time to know if I'll be opening up. Most likely, I'll at least be putting the charts and my levels in there in the room so that you guys understand what I'm looking for. But yes, headed to Miami, and I believe we fly back on Sunday or Monday morning. Again, I'll confirm in our notes section tomorrow. Okay. Moving into those earnings, I use eWhispers out on X. They're very reliable, have this beautiful calendar I can use, and you can see it's really easy to follow. What I like to do here is go back, remind you guys, several weeks ago we had a lesson where I teach you and how I look at things, how to trade into um, earnings by using supply and demand levels. And I like to use debit spreads on either side if I'm expecting more of a move outside of the ATR. And so far this year, I've only done a couple, but they have been working out. The two that I'm sitting on right now are, let's see, let's go into the trade section here. And my two trades that I am currently in, CMG, all right, and TXN. So the call side on TXN is up 114%, and I'm still holding on to those. I'd like to get full credit if I can, and we still have quite some time to do so. And then on the call side on CMG, those are looking good. I bought 54 days out and shared those with you guys as well. Those will take a little bit longer to know if I'm going to do well on the CMG report. So right now, CMG and TXN. And far as like names coming into this weekend, what names would I be interested in? I mean, there are the SOFI, Sophie, Visa, Starbucks, just kind of curious, Snap, FSLR, Pfizer. Moving on into, I love Spotify, have loved it for a very long time. Fun to trade, may do something here. Definitely if I see an opportunity. And then Wednesday coming in with some of the Mag 7s, you got Microsoft, Meta. Here's Robinhood, really like to see how they're doing. Qualcomm, you guys can see there's a lot of amazing names coming out into this week. And there's also a few names that I still have some of my leaps on, like McDonald's. We're doing well there on the McDonald leaps. So I'd like to see how they're going to report. And other than that, guys, it just looks really jam packed coming into this week. And after a big rally, it is interesting if we're actually going to get set up for a sell off or if we can get over the golden Fibonacci. And I can't wait to share those levels with you here just in a few minutes. Okay. So we got through we got through our earnings. We got through our our econ data. Now we're going to move into SPY, and we're going to take a look on TradingView. And we're going to use the quarterly candle. We're going to go over some notes here. And every week, you guys can see I update with notes. They're really straightforward because I really don't think that there's any reason to overcomplicate a process with too much noise. The reason why I concentrate on the quarterly is because it can give you the big picture so that you understand that when noise comes into the market, whether it be euphoric or whether there be a lot of fear, we can concentrate on what we're seeing. And to take you back for the last several weeks or even the last several months, I've always come in here and told you, hey, if we get the opportunity, if price comes back to this cloud, we want to be looking for an opportunity to buy. All right. And you could see that bad news led us here, right? It was really ugly. It was really hard to see, any sort of light. And we got the move down into the EMA. We flushed it, and now here we are, just a week or two later, and look at the powerful move that we've gotten. Um, it pushed very nicely and is almost a hammer here and almost an inside candle. But I want to remind everybody we still have 2 months and 4 days left before this candle closes. So there will be a lot of changes in the candle. Okay. So the cloud has worked very well, all right? But just understand if this is just a relief sort of bounce, I shouldn't say relief bounce. If this is just a bounce for an opportunity to get short again, we do have a zone that's underneath here that I would be looking and interested in trading this level, okay? So big question here is that the euphoria sets in, and sometimes it's hard to think about buying puts because you're like, finally, market's moving up. But for me, I'd personally like to take a shot when the market's going up to reposition myself for some sort of hedge, right? So I'm going to stay net long through the year. I'm going to take trims when I have the opportunity. And when we have huge setbacks like we did down here, I'm taking the opportunity to add into leap type trades or even position myself and buy even longer dated calls. Okay. So again, that's what my whole vision is here. Now, going into this week, we have 2 months left, like I said, for this candle to close. But over 564, the SPY breaks above the golden Fibonacci. That's a big deal. Basically, what I'm saying is on this move down, as we wrap and start to move up 618%, which is around this area, once we get over that, that means now the bulls are in charge and this down move is broken. All right. However, that 618 kind of puts us into some areas where we have a lot of resistance, and I'll show you that in detail on the ES futures a little bit later. Okay. All right, so now what? So the support is 533 by 513, and the two major levels are 537 and 563. I'll explain that right now. So we're going to pull up um, Thinkorswim, and let's go to SPY, and we are going to look at the weekly, which is right here. And I'll explain to you why I have two major levels at those levels. So one, let's go ahead and just appreciate the trendy edges. These edges were here long before price moved here. Matter of fact, we've talked about them over the last several months. Price moved down into the lower edge and price has moved off that edge quite nicely. This is part of the indicator bundle that I have here. So around 483, and you guys can see that we're almost $100 up from that. So an amazing move. Couple things to note here. The major level is the mid of that indicator. And basically what I'm saying is if we were to break down underneath there, then things would start to look a little bit different. And then we have the 618. So remember, I mentioned the 618 or the golden fib. Now that's at around 563. That's about $13 away. But you'll also notice that the average trading range or the average true range of the moves nowadays are quite big. The weekly is at around $25. So this is only coming in to half of the ATR. So it is and can be easily breached, but it is a really big level. You'll notice that when we look over to the left, this is pretty much a nice sell off area as we do, and is very close to an inside and down. We had a previous red arrow here saying, hey, things are starting to look ugly. We broke underneath the cloud, and we're coming into quite a bit of resistance in that level or in that area. So, again, several things. We had the 618, so we're not out of the woods here, bulls. And we also came up right to the cloud and stalled there on Friday. So from a bearish sentiment, and then we have a trendy edge right there. So a lot of resistance where we closed on Friday. All right. So again, resistance could lead to a move to the downside, but I don't think the downside would be. I shouldn't say that I don't think it'd be very big because those have been surprises this year. You think we're just going to get sort of a digestion, and then all of a sudden that is a 200-point move. All right. So I'm not going to put my foot in my mouth there. I'm just going to say, hey, this is the level, the major level, and up here is the major level. And you can see if we get above this major level of the 618, we will most likely also get above the cloud. That's a really bullish look here. It could open us up for a test, guys. This is crazy. A test into the all-time high, very close to it. All right, so keep an open mind. One thing I want to note here as well, we had a trendy turn signal. I encourage all of you who have the indicators to go back and back test this and just kind of count. Say, okay, every time we've actually had a weekly turn signal, has that led to an up move? And go back several years and take that information. You kind of get a probability, if you will, of how well this actually plays out afterwards. Okay, so I'm not going to talk about it. I want you to do it. Let's go ahead and now move into our next big picture, and that is going to be the QQQ. And you could guess that this pretty much looks the same. Price came down into the trendy cloud. It moved very nicely. My notes. The trendy cloud is doing its job, and all of a sudden we are looking at a hammer. This one's actually turned into an inside candle, which is really impressive considering we were down here towards the 400 level and we closed here again at 472. So again, things have changed very quickly, rapidly, if you will, and traders are now starting to feel very comfortable, probably. And but even though they're comfortable, we're still not out of the woods, and you could see that in the fear and greed index here soon. Okay, and with the levels that I'm sharing with you. Keep in mind the candle will change many times for the next 2 months, but this is a great reaction of the 9 EMA down here. The two major levels this week are 455 and 488. Let me go ahead and show you that on Thinkorswim. So here we are. Let's look at the weekly. Let's talk about it for a few minutes. Same thing. This is the trendy edge. Notice that we came down into that level and we pushed up very nicely. You can also see that we got a trendy turn signal on the QQQs. But let's talk about the bearish side of things. We're getting into what's called the golden pocket, which is the 50 and 618 of the all-time high to the low of this year. You'll notice that we also came up into the cloud where we're seeing a little bit of resistance there as well. So we have the 50, we have the cloud, and we have some formations in this area that say, hey, this could be a big resistance level. Okay. My major levels, I'm using the 38.2 of this move because we know if we break under the 38.2, we call that the bearish channel. So I need to know if we go back in the bearish channel. As long as we stay above there, that's a great thing. At the 50, all right, this is an area where I'd expect chop and maybe some digestion. And then the 618 is a major level for me because just like I said on the spies, this is a level if we break above it, not only will we be above the cloud, we'll be above the formations, but we'll also be above the golden fib, which is a really big deal. So just a lot of things that are showing us if we were to get above there, then things look great. Now for me, it's a 3-day hold. We have to stay above it for 3 days in order for me to feel better about it. So just because, let's say we get a move and it, just barely pierces above, that doesn't mean that I'm full on, bull mode here. Maybe for like intraday, but far as the week is concerned, can the week actually close over the 618? And just like the SPY, we were so close to that all-time high, and down here, it sure the heck did not feel like it, okay? So a couple positive things, but also note we're going into earnings. We got some macro, econ coming out. It's the normal story, folks, but we are opening up into resistance coming into tonight, okay? Next thing that I want to be showing you all is going to be the DXY or the dollar. We're going to take this back into the trading view right here. And let's go over here. And again, that's TXN. And we're going to go to a weekly. Not much of an update here. I have two major levels this week. Last week, the low and 104. Okay. And I'm sorry, I put the wrong one in there. DXY. What was I thinking? Here we are, DXY, there's the dollar. We came down into this level here. We bounced a little bit. And for me, again, the major levels, if we get up and over this structure in the cloud, then the dollar really looks like, uh-oh, it could be moving to go higher. But for right now, I would concentrate on the low of last week. And if we get over this structure in here, then I'd be concerned. And again, guys, that is the 104 level and last week's low. Okay. I'm still expecting the lower zone down here into the next couple months, perhaps into June, July timeframe. But again, we have to take out that low. Let's go ahead and go into the TNX, which is your 10-year treasury. And the yield, when you look at this, how it relates to rates, the yield on the 10-year treasury is a key indicator of market expectations for interest rates. Okay. The zones are working well. I'm neutral for now. We came up, we hit the zone, we rejected, cool. We still have this zone down below. We could see 3.8. My overall sentiment, several months now has been that we'll test this area into June, July timeframe. We'll see if I'm right. It's not a big deal if I'm not. But for right now, the charts are doing what they're supposed to do. We did go inside and down based off of this week's close, and we are underneath the cloud, so it could be that we drop a little bit more and just kind of go sideways. But I'd expect chop into this week. Okay. Next thing I want to go ahead and take a look at is going to be the skew. And the skew closed at 132 this past week. Now, this has been 3 weeks, 1, 2, 3, that we close under this green line. And like I said before, it's been over a year and a half since we've closed under this more than 2 weeks consecutively. We did have a nice bounce this past week. I was actually sort of surprised that this candle is not way up here. It feels a little off, but it's all good. Again, we're underneath that level. And the overall sentiment was for me is if we close 2 weeks, what we had noticed, if we had closed 2 weeks under this level, it usually brings us down to an extreme fear level. Again, we're not out of the woods. So a couple things to go back. The DXY, or sorry, DXY, the dollar is showing a little bit of strength from those levels, could push up a little bit more. We are in, when we look at the SPY and the QQQ, a lot of areas to say, hey, we're at resistance, but we're also at a holding point because of earnings, perhaps. And so this could lead to a sideways to down market. But again, we have levels intraday to not get overly biased and think, hey, we have to drop off here. And you guys know that. I love using the PMZ in the morning to set us up for great trades in the futures and the SPX. So again, we'll look at that in the morning. So this is a little bit bigger picture. Big thing here, not to really like be too concerned with this. This is more of a end of the week thing where I look at it, and it's just to adjust my portfolio basically. If it's too high, then put protection. If it's too low, looking to buy some calls. If we're kind of in the middle, just play it day by day. And remember, while the skew is just a useful tool, like everything I'm showing you, it's just one piece of the puzzle. And for me, it's a combination of everything I'm talking about to get me the better sentiment and the better guide for me going into this week. In saying that, let's look at the fear and greed index. It has jumped up quite a bit. I think it was at 21 last week on Friday. Let's see, 1 week ago. It was 19. So it's jumped up quite a bit. So traders are starting to feel a little bit better. This makes sense to me. We were really, really down here for quite some time. The market bounces. We start to get closer to a neutral as we get close to the big names reporting and a lot of names reporting for the earnings season kickoff. And so, investors are waiting to hear from big companies, kind of see what the outlook is and so forth. So everything's kind of matching up, but you can also look at it as the needle ticks closer to neutral. It makes sense from all of those technical levels that I was showing you as well. Now let's dive into one of my favorite parts, which is going to be the futures. So for me, my overall sentiment is neutral as we are at the golden pocket, the weekly cloud, and just under the lower monthly edge. So let's go in here. We're going to click on the ES futures. We're going to pull up that chart and take a look here. And this is the weekly, same thing. It's going to look a lot like SPY. The reason why I go over this is because we trade futures almost every single morning, along with options, equity, SPX, all that fun stuff. So again, reaching the cloud, it's kind of hard to see there. There's a trendy edge right there. We're between the 50 and 618, which typically means chop for me. So a lot of reasons to believe we could be opening up into some resistance. Again, if we break above the 618, which is 56.56, this is a big level. I talked about it on the SPY. It's the same thing here. We had a buy zone that's right around the trendy edge. That worked really, really well. We have a sell zone that is right around the trendy edge. And I would expect if we get super euphoric and we're like, oh my God, we're going to all-time highs, that this could be a sell zone, if you will. Basically, what I'm saying in the golden pocket, this could be a great area to get short, but I think a lot of people are also going to sit on the sidelines and just trade from an intraday perspective so that we don't get overly biased before a lot of these big names report and so forth. Okay. Let's go into this next smaller time frame. This is going to be the daily. You'll notice that I have triggers on here. You'll also notice that they've worked very well. I've put one here a little bit closer, so I have one now, basically almost at a gap fill, if you will, right in this area, and then we're opening up into resistance. I went ahead and put that golden pocket on there so you could see it. I have two different short triggers. Disclaimer here, I don't short, go long, or any of that just because I have a line there. I typically will go to a smaller time frame, look for a couple signals that we teach in the room, and then we'll make a decision there. But again, I also have traders who use the levels and decide to just use those and understand their risk before taking a trade. A couple things on this chart to note: we're going from red to white. Red to white is telling me that it is now, instead of being red momentum, we have some crossovers happening or some indicators showing that, hey, we're coming more into a neutral situation as we turn red to white here. Okay. Another thing to note is if we get up and over that trendy edge and that resistance, we are now out of the cloud on the daily. So that's a very positive approach as well. Over here on the 4 hour, what I love about this chart from a bullish standpoint is that the cloud is very close to price. So if we get a dip, typically what you'll get is on the 4 hour, you get the stair step in motion. And a lot of times when it pulls back, it's pulling back to that cloud, that 9 EMA on the 4 hour. And we just kind of ride that. So keep your eye on the 9 EMA on the 4, and just, if it pulls back, don't get scared. Look for the 9 EMA to see if it's going to be support for us. Okay. A couple things: resistance, we talked about it. This stands for lower monthly edge. That's part of the indicator package that we have. And then down here, I got some support. I got a weekly edge. Our weekly edges are here and here. If we get close to here, I'm looking to go long. If we break underneath the weekly edge there, caution, as I'm expecting sideways to down. But notice that the 9 EMA is confluent with that weekly edge. So this is going to act as support until it's not. So again, it's not until we go underneath that I think sideways to down. Okay. To the upside, we got a red box up here around 57.21 that could serve also as resistance. All right. Let's go ahead and get into the NASDAQ. Let's go ahead and click on that. And we're going to bring you over to a weekly chart here as well. Same thing. This one's pushed up a little bit into the cloud, so a little bit of resistance there. Also, again, on both charts, you're going to see that we had a turn signal. I would recommend you go back and look at all the turn signals in the past and just get an understanding. Did it create an up move more than it created a down move? The difference here is we're in the cloud. You'll notice that some of the turn signals when we are in the cloud are not as strong or underneath the cloud. Okay. So again, you have to go back, take a look, do most of these, result in a move to the upside after we see this yellow or no. All right. I'm seeing more yeses than nos, but that doesn't mean a whole lot. Okay. All right, so moving on, we're in the golden pocket. Again, we need to get above the 618. If we get above there, things look really good as we've broken that trend. And you can just imagine if you were to see a candle up here, you you look back and go, "Holy cow! I can't believe we're this close to the all-time highs again." So pretty neat. Let's move over here. The daily, same thing, red to white. This one's above the cloud. The NASDAQ tends to lead the way. They got some big names reporting this week. The 50 SMA, or the simple moving average, is right above. The 200 daily moving average is right there. So simple moving average, is right up there as well. So I would expect some resistance in here. Just take note of those levels there. And same thing, I have triggers here, but I like to refer to the smaller time frames to take action. Here's the 4 hour. I went on top of this candle, used the trendy edge, create a little red box there. I would expect some resistance in there. And down here, I went a little bit lower than normal, but same thing here on the 4 hour. Look for it to be support until it's not. Your weekly edges are right here. We have a double stack. This is really important. This is the yearly edge, and this is the weekly edge. Maybe this 4 hour 9 EMA with those two double stacks there are going to be some really awesome support. So please keep that in mind. And then we got some green zones to the downside where I would expect buyers to show up. I don't have a green zone right here. We might want to take, now I'm going to leave this one here, but just know that this lower yearly edge right here also serves as support. Okay. And other than that, we're going to now go into Bitcoin. As you guys know, I'm buying Bitcoin on dips and I continue to hold, and it's doing well. I am where I need to be. All right, on there. And I tend to do this when I talk about it. Let's go to Robinhood and just kind of see where current price is. Now, my focus, I'm long term. It's fun to watch people kind of get in and out of Bitcoin. You can still make really good money. My focus is the monthly and quarterly charts and just for the long haul. Okay. So this is based off of in here. You'll see they have like a demand zone, the risk zone. I got some support here. I got targets. So targets going into this week, believe it or not, if we get up and over 97,000, I think we hit 100 to 106. All right. So pretty big deal. But when I look at my Robinhood at this very moment, it's showing that it is trading at 94,134. So that's where it is right now. It doesn't mean it's going to open there, but that's just what it's showing at this very moment. Okay. So things looking good on Bitcoin. I like the monthly. We made a new high. Again, the month's not over, and that's what I'm gonna lead to for this week. Could be really, really fun. There's just so much going on. There's like econ data. There's major levels, the 618, which is really exciting for us bulls if we can get up and over it. But we're also coming into the end of the month, and so we are sort of ending here on a bullish note. Um, if some reason we're over the 618 and we're going into the end of the month, this could set up for a really fun SPX trade to the upside during that, part of the day. And we'll talk about that as we get closer on the 30th and the 1st. Okay. So again, this could set up for a very bullish play, but again, we'll find out what's going on as we get closer to that day. Let's get, you can, from here, just hit that like button. I really appreciate it. But once again, as a reminder, it's really easy to talk about the market being easy. And I feel like a lot of traders have short term memories. We really do. I don't. I tend to remember everybody that was talking about bearishness and how they didn't want to touch the market. And it's okay, right? If you're one of those people, I'm not making fun of you or being mean. What I'm saying is maybe start to open your mind a little bit more. A lot of people talk about buying dips, but when it comes down to it, they have a really hard time because they're not either thinking long enough. They're like, oh, they're in a 5 minute, time frame and they buy a dip and they get stopped out 20 minutes later. a lot of times, when I'm talking about buying the dip, I'm looking at monthly and quarterly charts, folks. This is a lot longer perspective than most people have. And the way that I've been approaching the market this year is buying higher deltas, whether at the money or just a tad out of the money for 2026 expirations, trading the futures and the SPX from a daily perspective. I am currently working on SPX bots with a team that, I looked out and found them and feel like they are amazing. So I'm very, very excited about that going into probably June, July timeframe. I hope to have some data and be where we want to be to, you know, um, I guess show you guys what we have and what those bots do. So very, very exciting times. So please keep in mind that I also have on quite a few positions. So it's not that I don't want to trade. It's that I have a lot on. So when the market's moving up, I'm doing well and I'm very excited and I don't need to overtrade. But Melissa and I are here to help you if you want and need any of our technical analysis, just to kind of give you our opinion on what we're seeing from a level perspective. And saying that, again, please have an open mind. Try your best to think about buying lower, selling high, trimming high, pulling stops up, and don't get too biased. All right. This market is very volatile. There's a lot of things happening. And in saying that, I didn't think I was going to show you guys another chart, but the VIX, I went over this with you guys last week. I said, look for volatility when we get to 2475 by 22. Look where we closed right there. So I don't know. Maybe we open up to some volatility tonight. We'll see. I can't wait to trade with you guys. Let's continue to power through and become better traders together. Here's to you guys and having an amazing end of 2025 as we're getting closer to the midway line. So can't wait to trade with you guys, folks. Have a great one.